Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. All right, so first things first, you got jobs in about an hour and 15 minutes. It's not quite 7:15 in the morning Eastern time as I'm doing this. So daily chart, and we've been talking about, they've been battling over 4,000, the 9-day, the 100-day EMA. They went back up and they touched the 200-day and the 50-day yesterday on the move to 1975, not quite 40-20. And for about the fourth, fifth, sixth time, the bulls were very uncomfortable trading anything up there with a 4 on it. And it was a situation where it was pretty whippy. Every trade we took yesterday was right. It was either at 4,000 or it was at 99. We're long early, and then as it started to break, it sealed off VWAP and a couple of other things, and it ended up being a really nice subscriber webinar for us yesterday on entries and trade management. So as it stands now, when they rejected here, this is hourly chart. Here's your 1975 up off the open, 10 o'clock. It starts to show some chinks in the armor. When you get into this 11 o'clock hour, which you can't see on this chart, but you can see on a 5-minute chart, is that of a 50-minute chunk of time, it had spent 45 of those 50 minutes below VWAP. And that's always something for me that says, look, I get it that there's 4,000 here. I get it that the 9 days here. But in the short term, in the trading of it all, VWAP is sealing off. And until they turn it into support, we're going to be short. We're going to stay short. It might take a little doing, might take a couple of entries, but that's what we're going to do. They had a nice hard break. You can see the consolidation, and we always talk about this. It's consolidation, consolidation, expansion, consolidation, expansion. Bears have won both of those battles. And you never know just how far one of these suckers is going to run. So we're still short 4,000. I just rolled the stop down to 39.30. I will not be involved. I'll be flat into jobs, just like we've been flat into jobs for 12 years. We'll let the number come out. We'll let the reaction range happen. Don't game jobs. One of a couple things is going to happen. You're going to get it wrong. If you're flat now and you're going to throw something on at 828 or 829, you're making a whole lot of assumptions that you know nothing about with regard to the jobs report. So we'll see what happens. They traded as low as 38.84 quarter. One of the things I had mentioned to the subscribers in the room is this. When we were here, I said, ideally you want to seal off these moving averages here, make a lower low. It's just, I wasn't predicting that it was going to happen, but what I said at the time was, look, if you do that and you get this, you're going to get this. So we got that one. Now what that opens up is we are below this from back on January the 10th. The low on that was 38.91. What did we do? 88 and change? 84 and change? Okay, whatever. What this opens up now, unless they really slam them up to the upside off of jobs, is the bottom of this December triangle, this December 22nd low, 37.88. You have to be thinking about it. You have to be thinking about it if there continues to be downside pressure. We did not engage the lower band yesterday, so we're not talking about a lower band right at this point. Jobs is going to have to break the way of the bears in order to engage that. But if they can, here we are. And just to review, you go back to the webcast that we were doing back around March 5th, March 6th, March 7th, we talked about the 20-day, the daily mid-band, the 20-day simple moving average, and how that's a delineator of buy dips or sell rallies. They had their test. They had 2 days to figure it out. They sealed it off, which was a good job by the bears, keeping the overall market at sell rallies. And what you saw yesterday from that 1975 down was a big fat rally sell. So yesterday is a good example of how a lot of the things that we look at from a bigger picture right down to that 1 minute chart that we're trying to figure out on an entry, how it all kind of fits together. And it turned into a really nice little subscriber webinar so those of you that are members in the room, we'll have that up in the member area. I'm I am converting the recording right now. Actually, we'll have that up in about 15, 20 minutes. And it was really good to walk through a 1-minute chart with everybody yesterday. So, jobs at 8:30. There's no sense talking about the tape any more than I've already talked about it, because 8:30 is going to happen, and they're going to have a whole new set of rules. I will tell you where things are, though. VWAP is at 39.01. Proprietary moving average, 39.08. Hourly mid-band, right around 16, half, 17. What do the bulls need to do? They need to stop trading in the 38s. Unless you really get something that's going to goose this tape. And don't forget, it went up yesterday on ADP. On claims. So that might be a portend to at least it trying to lift. Ideally, if you are the bulls, you got to close above the hourly mid-band at a minimum. I think 39.50, closing above 39.50 would be a pretty big win for you. But it all depends on what you do with it next week. This weekly pivot's going to shift down, and you'll have to fight that battle on Monday. Bears, what do you want to do? Ideally, bust the Globex low, close with something with a 38 on it, make everybody wonder over the weekend whether there's a hell of a lot more to go. Because if people get nervous, you could get the Sunday night into Monday, with not much of a bid. People are starting to say, I got two schools of thought coming at me yesterday from a variety of directions. I hear from people all day long. You have bears that are not believing in the move, and justifiably so, because how many times are you going to put your hand on the stove and get it burned before you're like, you know what, I'm just going to take my profits. And especially bears that are very good and are, and make a lot of money in the right places. A lot of them are like, we'll see. You are getting people that have been bullish talking about, do I want to wait? Can I get a better rate here? Things like that. So somebody's going to be wrong. And then you have the crowd that always thinks the moon is going to crash into the earth and that every dip is the death of humanity as we know it. Those people need to stay right over in the corner where we always keep them. Because barking at the moon this time sounds the same as barking at the moon every time. You stick them over the corner with, S&P 5000 hat guy, leave them over there. Okay? I think jobs and Sunday into Monday price action is going to be very important. And if the bears can somehow hold price for a couple of days below 3,900, we got another CPI coming up. It gets very, very interesting about a lower push. If they're not going to get it done again, the red flag is going to be an inability to hold 3,900. And that's when you have to say to yourself, okay, we're making higher lows. De facto, you will be. We're making higher lows. We're making higher lows. There's a point where it's like, okay, we need to revisit some of these prices. Where could it go? It could go back to daily midband, which doesn't necessarily make it a bull market, right? We just saw that. I just showed you that. So very interesting jobs report coming up. The Bears are in the best position they've been in quite a while, which actually makes me nervous for the Bears. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Good weekend. Be good or not, and I'll talk to you Monday.